Welcome to Earnings Central. In this video, we'll break down Johnson & Johnson's second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $22.85 billion. The company actually reported revenue of $23.74 billion, surpassing expectations by 3.9%. This quarterly revenue also marked a 5.7% increase compared to the $22.45 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was $2.68. The company actually reported an EPS of $2.77, exceeding expectations by 3.4%. However, this result reflects a 1.8% decrease compared to the $2.82 per share reported in the same quarter last year. Now let's dive into some additional performance metrics highlighted during the earnings call. JNJ achieved solid operational sales growth of 4.6% across the business, reaching $23.7 billion in quarterly sales. This is particularly impressive considering the company faced a massive 710 basis point headwind from STELARA's loss of exclusivity to biosimilar competition. Few companies could maintain growth while losing a multi-billion-dollar product, but J&J's diversified portfolio proved its strength. The MedTech division showed significant improvement with 6.1% operational growth, representing a 4.4% sequential improvement over the first quarter. This acceleration was driven by strong performance in cardiovascular, surgery, and vision segments, demonstrating the division's recovery momentum. J&J generated over $6 billion in free cash flow during the first half of 2025, providing substantial financial flexibility. This strong cash generation occurred despite elevated tax payments related to final TCJA toll tax obligations, highlighting the company's robust cash-generating capabilities. Management maintained confidence in achieving approximately 300 basis points of operating margin improvement for the full year. This improvement incorporates efficiency programs and accounts for the dilutive impact of recent acquisitions like intracellular therapies. J&J continued its commitment to innovation with $3.5 billion in R&D spending, representing about 15% of sales in Q2. This substantial investment underscores the company's focus on pipeline development and long-term growth. The company ended Q2 with $19 billion in cash and marketable securities against $51 billion in debt, resulting in a $32 billion net debt position. This includes debt raised for the $14.5 billion intracellular acquisition, which closed in April. Now, let's shift focus to some of the key insights and takeaways from the earnings call. While STELARA declined 43.2% due to biosimilar competition, J&J's diversified portfolio shined with 13 brands delivering double-digit growth. The 90% of the innovative medicine business, excluding STELARA, grew an impressive 15.5%, demonstrating the strength of the underlying portfolio. J&J's oncology division delivered 22.3% operational growth, and management reaffirmed their bold target of becoming the #1 oncology company by 2030 with over $50 billion in sales. This ambition is backed by more than 10 products in market across 26 approved indications and over 25 treatments in late-stage development. One of the most exciting near-term catalysts is TER-200, a first-of-its-kind drug-releasing system for high-risk non-muscle invasive bladder cancer. The FDA has granted priority review, and J&J expects to launch later this year. Management projects at least $1 billion in annual peak sales for this transformational product. The cardiovascular business was a standout performer with over 22% operational growth, driven by strong performance from Abiomed, Shockwave, and electrophysiology products. This positions J&J as a leader in 4 of the largest and highest growth medtech segments within cardiovascular intervention. Tremfya's expansion into inflammatory bowel disease is paying off with 30% growth in the quarter. Strong uptake in Crohn's disease and ulcerative colitis positions this as a potential $10 billion annual peak sales product. Looking ahead, JNJ expects multiple important approvals in the second half of 2025, including subcutaneous Rybrevant for lung cancer, Caplyta for major depressive disorder, and regulatory submissions for next-generation cardiovascular products. That wraps up our recap of Johnson & Johnson's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.